Yeah, good evening to you all. And, you are all welcome to tonight's class. And I believe you're all doing well. The documents I sent on your page, and as you're seeing it right now, is an extract from your taxation 1 handout. And that is basically what you are going to be using, all things being equal, for this semester in studying of taxation. Now, tonight we want to go into the introduction, or I want to go into the introduction with you guys, which will enable you to understand the basis upon which this whole taxation will be formed or will be based on. Bear in mind, we did business finance basics. Today we are doing taxation basics. So I'll take you through all the basics before we zoom into them proper. So tonight is taxation, and that is basically what we are going to be doing right now. When we talk of taxation, one may ask, what is taxation? Taxation basically means a compulsory payment by individuals, household, firms, or companies to the government. A compulsory payment is not a payment. You should note the terminologies inside. Tax is a compulsory payment. Paid by who? By an individual, by companies or firms, by households. And whom are they paying to? They are paying to the government. So you should be able to distinguish between who is paying and who is collecting. That is the way and manner in which you are going to score more marks when somebody asks you what is taxation. So in your book, they said taxation can be considered as a compulsory payment from household and firms to the government to enable the government finance its projects and programs. The money collected is used for the common good, that is for the provision of certain basic social amenities, which are more efficiently provided by the state rather than by individuals. So the tax government collect is basically being used to undertake social projects, okay, social projects or projects that is going to benefit the nation, projects that are going to benefit I and you. Someone may also say tax is a compulsory financial charge or some other type of levy imposed on a taxpayer. And who is the taxpayer here? Is the individual or the company or the household. These are the taxpayers we are talking about. So in taxation, when we talk about taxpayer, know that we are not talking about the government, but we are talking about any other entity or any other unit other than the government is considered a taxpayer. In order to fund what? Government what? Projects in various public what? Expenditure. Now take note, a failure to pay a long tax or a failure to pay tax is considered tax evasion. So when you hear the word tax evasion, it means you have failed to pay tax. You have dodged the payment of tax, that is tax evasion. Okay, and tax evasion is punishable by law. Tax evasions are punishable by law. When we get there, I'll explain most of them for you to understand better. Now, one may also ask, so when we are talking about taxation, what are the kinds of taxes that we have? We have the direct tax, and then we have the indirect tax. We have direct tax, and then we have what? Indirect taxes. We'll get there, and then you also understand better. Let's look at taxation in Ghana. Taxation in Ghana. You need to know that the primary purpose of imposition tax is to raise money for government of Ghana. The primary purpose of tax in Ghana is to raise money for the government of Ghana. And these monies help the government to meet its public expenditure. So anytime governments get a revenue shortfall, it means that public expenditure is also going to have a problem. But when and where or how the tax started in Ghana? Taxation was first introduced in Ghana, the then Gold Coast, in 1943. And by then, the law that was governing taxation in Ghana is the Income Tax Ordinance Act, 1943. And this ordinance was amended several times, and during 1952, it was also amended and it was rectified again in 1961. It was also rectified again in 1978. It was also rectified again in 1963. It was also rectified again in 1965. Several amendments was made to the Act until 2009, where the government of Ghana have decided that this is the way forward of taxation in Ghana. As it stands now, the tax law that governs taxation in Ghana is the Ghana Revenue Authority Act 791, 2009. So Ghana Revenue Authority Act 2009, Act 791. Now, most students mix it with the Companies Code. The Companies Code or the Companies Act is Act 179. Take note. The Companies Act is Act 179, 1963. The Income Tax Act is 791, 2009. So most students, because we have 7, we have 9, we have 1, they get to confuse them. So you don't need to confuse them whenever you've been asked. Companies Code is 179, 1963. Income Tax Act is 791, 2009. It is this Income Tax Act we are using now, up to now, since then up to now. Before 2009, or before the passage of this law, the Ghana Revenue Authority, as it stands now, was having 3 divisions. We have the IRS, we have the SEPs, and then we have the IRS, the SEPs, and then we have the VAT. Yes, we have 3. The SEPs is the Custom and Excise Preventive people. Okay, so Custom Excise Preventive Service is SEPs. So the Custom and Excise Preventive Service is SEPs. CEPS is SEPs. So you have the SEPs, which they basically deal with the borders. So you have, they protect our land borders, they protect our air borders, and then they protect our sea borders. So when you go to Temaport, you see the SEPs there. When you go to the Togo border, that's the Flower border, the Burkina border, you see the customs over there. When you go to the Kotoka International Airport, you see the customs over there. And up to now, we still call them customs though. Then we have the VAT services. This arm of the revenue authority, they are interested in the indirect tax collection. So everything you buy in this country, there is a component of VAT on it. Then we have the IRS, the Internal Revenue Service, where our former president, President John Mills, was heading before he became the president. The IRS, the Internal Revenue Service, they deal with basically most of the direct tax. The pay as you earn, that's the pay as you earn. Then we have the company tax, on and on and on and on, royalties and on and on and on. That is what the Internal Revenue Services was doing, or that is what the Internal Revenue Services was mandated to. Now, this was how these three agencies were operating. They were all operating as a separate entities. They report separately to the Ministry of Finance. They report separately. But through amendments and through developmental processes or procedures, the government of Ghana see it wise and realize that these three divisions, their goal or their vision is towards revenue generation to the government. So if all these people, their vision is to generate revenue to the government or collect revenue for the government, why should they be operating separately? Why don't we bring them under one umbrella and give them more power to operate? Once we do that, we get more revenue. And that is what brought about the name, the Ghana Revenue Authority. So when you hear the name GRA today, this was the genesis of GRA. So the Ghana Revenue Authority now has been divided into three different divisions. So when you take the Ghana Revenue Authority, it has three levels. We have the higher level, we have the medium level, and then we have the small level. Now, I want to explain it this way so that you understand. When we say the higher level of the Ghana Revenue Authority deals with collection of revenue from higher taxpayers or taxpayers they consider to be in that higher bracket. The medium level is also mandated to collect revenue from taxpayers that are in that medium bracket. The small level is mandated to also collect taxes from taxpayers that are in that small bracket. So if I take level 100, 200, 300, level 300 will be pegged against the higher level, level 200 will be pegged against the medium level, and level 100 will be pegged against the small level. And so therefore, the higher level is called the LTO. The LTO. The LTO means large taxpayers office or large tax office. So taxpayers that pay large tax. they go to that side. So the Newmont, Ghana, the Anglo Gold, the Ashanti, the Tallow Oils, they file their tax return at the LTO. There they deal with big money. When you see some of the checks, you even faint. The MTO is the second level, which is the Medium Tax Office. The MTO is the Medium Tax Office. The MTO is the Medium Tax Office. And then the STO is the Small Tax Office. The Small Tax Office. And all these revenue branches are under the Domestic Tax Revenue Division. The Domestic Revenue or Tax Revenue Division. And this division is under Ministry of Finance, and they are charged with domestic tax administration. Are you getting me? Now, at the end of the day, the domestic tax division is headed by a commissioner, or the leader of the Ghana Revenue Authority is called the Commissioner General. So you have the Commissioner General sitting at the top like the president. Then you have the commissioners handling or heading various divisions, various STOs, various MTOs, and then various STOs. In fact, we have only one LTO in Ghana. The place that got bent in circle, the LTO was part, the LTO was there. And then MTO2 was there. So where was bent in circle, we have two divisions there, the LTO and then the MTO. So the LTO and the MTO was what, the LTO was what got bent. So you have commissioners heading the various divisions. And when you start to do your service, you appreciate and understand what I'm saying here right now. Now, let's look at the functions and responsibilities of the Domestic Tax Revenue Division. Now, the core functions of the services are to identify all taxpayers and collect tax from these people. So you hear the ministry going or the minister going to the parliament, then you say they are going to widen the tax net, they are going to widen the tax net. That is what it means. Identify all taxpayers. You hear the minister going to parliament and say, oh, they are going to introduce what is called tin numbers. They are all means of identifying all taxpayers. Then they also assess the taxpayer. They do assessment to see that, yes, this person is qualified to pay tax. This person is not qualified to pay tax. If you are qualified to pay tax, how much tax are you supposed to pay is the assessment. After the assessment, they collect from you. And when they collect that money, what are they supposed to do? They pay into the consolidated fund. The country's #1 account is the consolidated fund. The consolidated fund is an account in which all monies accruing to the government are being paid into. And all monies accruing from the government are being paid from. So if you want to pay money to the government of Ghana, you pay it into the consolidated fund. When the government of Ghana wanted to pay you or give you money, he pays it out of the consolidated fund. So the consolidated fund, simply put, is the purse of the government or is the purse of the country. Now, the responsibilities of the Domestic Tax Division. Now, the one of the major responsibilities of the tax division is to collect taxes. That is one major responsibility of them, is to collect taxes. That's their #1 tax, is to collect tax. Aside that, they don't have anything to do. Collect tax, do tax education. That's it. What are some of the tax are they supposed to collect? Income tax, gift tax, value-added tax, capital gain tax, royalties, stamp duties, VAT, on and on and on and on and on. As I'm mentioning, I mentioned gift tax. Somebody might, hey, gift, so your tax was so yes. When somebody dash you money, you have to go and pay tax on it. When somebody dash you anything, you have to go and pay tax on it. And that is what is considered gift tax. Communications tax, the CST that was introduced somewhere last year or somewhere this year, is the communication levy. Then you have the national stabilization levy. Now that one has been repealed, so it is no more in existing. Okay, so as I said, these are the functions of the revenue division or the domestic tax division. Then we have the customs division. So the customs division basically deals with the VAT aspect as I was talking about. Okay, the customs division basically deals with the VAT. They are supposed to prevent smuggling and all those stuff. So you hear the people at the flower border telling you that they're smuggling on and on and on. They are preventing smuggling and all this. Then we have the support services division. So now, the Ghana Revenue Authority as it stands is divided into three. The Domestic Revenue Division or the Domestic Tax Collection Division, which is having three branches under it. The STO, the LTO, and then the MTO. They all fall under the Domestic Revenue Tax or Tax Revenue Division. Then we have the Customs Division. Then we have what? The Support Services Division. So the Support Services Division are like the HR, the IT specialists over there. I getting the security men, people who their core mandate is not to collect money. I getting it. These people are the support, the drivers or the transport department. They are all the support services division. And these divisions help the Ghana Revenue Authority in its entirety to function very well. Now, the structure of the GRA, as I told you, you have the Commissioner General sitting at the top. Then you have the internal audits, and then you have the internal affairs. You have the Board of Secretariats. You have the Communication and Public Affairs. All these people report directly to the Commissioner General. Then you have that of the Modernization Program Office. They all report directly to the Commissioner General. Then Commissioner of Domestic Tax Revenue Division, Commissioner of Customs, Commissioner of Support Services. All these commissioners also report directly to the Commissioner General. Now, as I told you earlier, the Domestic Revenue Division is having the LTO under it. It have the MTOs. I told you we have only one LTO. It have the MTOs under it. Then we have the STOs under it. Then they have the policy and operations under. But these three are the major ones that operate heavily under the domestic tax division. Then you have another divisions too under the customs. You have another division too under the support services. As I told you, the administration, finance, research and planning, information technology, human resource, transport, security. All of them are under the support services. All of them are under the support services. Now, what are some of the benefits we stand to gain as a country with this integration? We have some benefit to the nation. provide what a holistic approach to domestic tax and custom administration in the country. I getting in on and on and on and on. You can read it from there. It has advantages to the customer or to the taxpayer, better customer service delivery, reduce compliance costs, single source for tax inquiries. So you can go to one place and get all your tax inquiries and everything is boom for you. Then to the Ghana Revenue Authority itself, what are some of the advantages to them? It is what one is reduction or drastic reduction in administrative cost and collection, improve interdepartmental information sharing, optimal use of resources, on and on and on. And then what are some of the advantages to the staff of the Revenue Authority themselves? I get it. It aids in what? Staff's what? Remuneration. Okay, these are some of the advantages that the integration of the three divisions, that's the SEMs, the customs, and then the IRS, has brought to the nation. Okay, has brought to the nation. So after the integration, we have the broad objective of the Ghana Revenue Authority that has been enshrined here: provide a holistic approach to tax and customs administration, promote efficient collection of revenue, improve information linkage and sharing among divisions of the authority, provide other matters related to the improvement of revenue administration. These are some of the objectives of the Ghana Revenue Authority. What are some of the functions of the Ghana Revenue Authority? To assess and collect taxes from taxpayers, to promote tax compliance and tax education, as I told you earlier. Combat tax fraud and tax evasion is another function of the Ghana Revenue Authority. Advise the district assemblies on the assessment of collection of their revenue, make recommendation to the Minister of Finance on revenue collection policy. So for the minister to come and stand in Parliament and say that my revenue projection is 6.4 billion is based on analysis the Ghana Revenue Authority has given him or her. For the minister to come and stand in Parliament and say that there's a revenue shortfall of 40%, it is based on the analysis given to him or her by the Ghana Revenue Authority. So these are some of the things you need to know. These are some of the things you need to know about the Ghana Revenue Authority. And once you're able to know these things, you will be in the position to talk more about the Ghana Revenue Authority and also be in the position to understand the operations of the Ghana Revenue Authority. Now, let's look at kinds of tax. Let's look at kinds of tax. And as I told you earlier, taxation is a compulsory charge levied by the government to an individual who is supposed to pay these levies to the government, which is going to enable the government to fast-track its developmental activity. Fast-track its developmental activities. Now, in my earlier submission, I made mention that we have two basic types of taxes. We have two types of taxes. We have the direct tax, and then we have the indirect tax. Now, when we talk about direct tax, what does it mean? It's a tax an individual or organization pays directly to the imposing entity. When I bring it down to your level, a direct tax is a tax paid by that individual or an entity directly toward the GRA, to the Ghana Revenue Authority. Now, a taxpayer pays directly to the government certain type of taxes which are considered to be direct tax. That is property tax, that's property rate. Income tax, that's pay as you earn. Company tax or corporate tax, they are all part of direct taxes. Gift tax, they are all part of what? Direct taxes. Rent tax, They are all part of what? Direct taxes. So now, the moment you know the amount of tax you are paying, the moment you know that, oh, this is how much I'm supposed to pay in whatever money I get, then it amounts to a direct tax. So a taxpayer, for example, pays direct taxes to the government for different purposes, including real property tax, personal property tax, income tax, or taxes on what? Assets. When we get there, you understand most of these things better. Now, let's continue. Now, direct taxes cannot be passed on to a different person. You should know. Now, you cannot shift the burden of direct tax onto another person. That is one characteristic of qualities of a direct tax. The burden of the tax cannot be shifted. Unlike indirect tax, that you can shift the burden of the taxation onto another person. For direct tax, you can't do that. You are the one who is supposed to pay it, and you need to pay it. The individual or organization upon whom or which the tax is levied is responsible for the fulfillment of the full tax payment. Direct taxes, especially in a tax bracket system, are known by some to be a distinctive to work hard and earn more money, because the more money a person earns, the more taxes the person pays. So in direct tax system, the more you earn, the more you pay. So people who chop big salary pay more tax. People who chop small salary pay small tax. So sometimes when you are sitting down and say, hey, the man is being paid 1 million Ghana cedis, you have no idea the amount of taxes that are being taken from that 1 million Ghana cedis. You are earning just 600 Ghana cedis, and then they'll take you tax of just 100 Ghana cedis. For the tax they take from that 1 million Ghana cedis can pay your salary for the whole year, and they'll be balanced. So they pay more tax. Now, direct tax is the opposite of what? Indirect tax. Direct tax is the opposite of what? Indirect tax. So let's look at what is meant by indirect tax. Let's look at what is meant by indirect tax. Now, when we say an indirect tax, unlike direct tax, it is a tax that we normally call the consumer tax. So pay it, have it at the back of your mind. Indirect tax is paid by the person who consumes the service or the item. So if I'm a producer of this water, if I produce the water and I don't drink it, I don't pay the tax on this water. If I give it to you or I sell it to you and you buy and you consume this water, you have paid the indirect tax on this water. If you decided not to drink it and you sell it to another person, the person who consumes it pays the tax on this. So people normally also call it the supply chain tax, because it is a tax that is being collected through supply chain. So the more the commodity passes through the supply chain, the more we know who the consumer is going to be. So it is passing through the supply chain to the final consumer. So the final consumer of the commodity is actually the taxpayer of that commodity. Why are we saying you pay a tax but you don't know? You are going to buy the water and then they say the water is 2 cedis. You just pick out your 2 cedis and then you pay it. There you go. in actual fact, the cost of the water is 1 cedis 80 pesos, but government's tax of 20 pesos is inside. Now somebody is going to ask the question, but how can the government come and collect that? So if I pay the 2 cedis, so who is going? How will the government get the 20 pesos? Would the seller go and give the money to the government? Yes, because of the question you are asking. Government also have asked that question long time. So government say, hey, master producer, before you give this thing out, me tax was to 20 pesos no maji dada. Until now I do a producer. Until the producer has already paid that tax. So if the producer consumes this water, then automatically it is the producer who is considered the consumer of this product. If the producer decided that he is not going to consume the product, then he will sell it to you. So it cost him 180 to produce it. The government took 20 pesos from inside, so he will sell it to you for how much? 2 cedis. So that when he sells it for you 2 cedis, he has recovered his 20 pesos he paid to the government. If you bought it for 2 cedis and you are not going to consume it, and you say you don't like profit, then you also sell it for 2 cedis. You don't lose anything. But if you say you want 2 cedis, you want profit, then you can sell it for, let's say, 2 cedis, 30 pesos. So you collect 2 cedis, 30 pesos. You take your 30 pesos as profit, then the 2 cedis is considered as the cost at which you bought the item. If the person who also bought it for 2 cedis, 30 pesos decided that he don't like profit, he will sell it for 230. Then case closed, he doesn't lose anything. If you want profit, then he will sell it for 2 cedis, 50 pesos. So you see that sometimes you go to the market and then the thing you have been buying from the backyard of your house is 3 cedis. You go to the market and the thing is being sold for 1 cedi, 50 pesos. They say, mommy, we pay a wiki do. I dare I thought was 1 cedi, 50 pesos. About the ton wahama and 3 cedi. But you had no idea the medium through which the item was passed through before it got to you. So the more it goes through a lot of retailers or a lot of sellers, the higher the price, because everybody wanted to add his or her own commission or his or her own profit on it. That is why you see that small shops, things are quite expensive than when you go to the supermarkets, than when you go to the shopping malls, than when you go to the wholesale in that order. That is the reason. That is the basic reason why. So now let's continue. So indirect tax are defined by contrasting them with direct tax. Indirect taxes can be defined as taxation on an individual or entity which is ultimately paid for by another person. The body that collects the tax will then remit it to the government. But in the case of direct taxes, the person immediately paying the tax is the person that the government is seeking to tax. So the two classical difference between the two taxes is that for the direct tax, you the taxpayer, you are paying directly to the government. It is between you and the government. The indirect tax, somebody is between you and the government. So the government is hiding behind that person, collects the money, then the person will come and collect it from you. That is what it means by indirect tax. And a classical example is the VAT, the value added tax. We have excise tax, on and on and on and on and on. Okay, so the examples of indirect taxes, you have the VAT, you have the import duties, you have the excise tax, on and on and on and on. Okay, some entities call the VAT sales tax. The value added tax can also be called in some jurisdiction like the US sales tax. Sales tax, okay, sales tax, okay, or VAT. Okay, so that is what you are supposed to know. That is what you are supposed to know when it comes to direct and indirect taxes. And it is very, very crucial, very, very crucial, very, very important when it comes to your assessment or your examination. So therefore, ladies and gentlemen, you don't need to forget an inch in your academic study. Now, let's look at the advantages and disadvantages of direct and indirect taxes. The advantages and disadvantages of direct and indirect taxes. Now, as I said earlier, direct taxes include income tax, that's the pay as you earn, the corporate tax, that is the tax companies paid on their net profits. We have capital gain tax, whenever companies or individuals sell an asset and they make profit on it. So profit on disposal of assets is considered capital gain tax. Profit on the sale of stock, profit on the sale of shares are all considered capital gain. So if a business sells an asset and make a profit, it is capital gain and you pay tax on it. Somebody will say, what about if they make loss? It is called capital loss, so you don't pay tax on it. Then we have property tax, we have capital transfer tax, which is basically called the gift tax. So these are basically some of the direct taxes we are talking about. Now, when we talk about, or we are looking at the advantages of direct tax, the basic advantages of direct taxes, number one, certainty. The taxpayer is certain, okay? The taxpayer is certain about the exact amount he or she is paying. The taxpayer is what? Is certain about the exact amount he or she is paying. Convenience. Now, when somebody talk about the convenience of the payment of that tax, what comes into mind? Now, let's take pay as you earn for the system. For example, it is easy for the taxpayer to pay that tax at the time money is coming to him. And it is also easy for the tax collector to collect that tax at the time money is going to the taxpayer. So they conveniently take out that money, or you conveniently pay that money without feeling the impact. So at the end of the year, that at the end of the month, that is why the Ghana Revenue Authority does not wait, especially those of you who are working. The Ghana Revenue Authority does not wait to the end of the month, to the middle of the month. Then they will say, Komansa, you have a tax to pay, come and pay the money. No, they don't do that. Because some people, by the end of the, before 15th, they are finished spreading their money. They are finished spending all their money. And people, when you give them chance, in fact, they will spend and spend and overspend. They will say, oh, let me spend next month, I'll take out double. And then they will be there. They will not take out the double, and then the money is piling up. So what the GRA does is that at the time your employer is paying you, they take out their tax. Case closed. High yield. When it comes to direct tax, the cost of collection direct tax is lower than the cost of collection indirect tax. So the government is able to get more money there than that of the indirect tax. When it comes to indirect tax, they have to go and be chasing some, spend more money in collecting some of the tax, because a lot of people will try to evade the tax. Are you getting it? So at the end of the day, the government know how much money is coming in when it comes to direct tax than that of indirect tax. So the government is in the position to use that money for projection, because the cost of collection is very, very low to the revenue generated. They can generate revenue of 1 million, but maybe they have used just about 1% of that money as expenditure and collection of that money. Then equity. There is fairness. Okay, when it comes to direct taxes, there is fairness. The higher you earn, the higher you pay. Now, why are we saying there is fairness? Because if they say you earn 1,000 Ghana, do people who earn between 1 cedi and 1,000 Ghana pay 5%? They'll pay 5%. People who earn 1 million and above will pay 30%. Me, I don't earn 1 million, so how will I go and pay 30%? So there is fairness when it comes to that side. The redistribution of what? Of income. Okay, so we tax the rich more to assist also the poor. So at the end of the day, you are living at East Legon with people who can drive 4x4. You don't have 4x4, you don't have Land Cruiser, you don't have V8, you don't have a Range Rover. They wake up, you don't live in a flat, you live in a single room. But all of you use the same road. All of you use the social amenities over there, the good hospitals over there, all of you use it. But it is chunk of their money that was used to complete those things or to put up those things. So that is one advantage of direct tax when it comes to redistribution of income and equality. Okay. Then disadvantages of indirect tax, of direct tax, disincentive to effort. When people who are working more are being taxed more, they tend not to work hard because they don't want to get more money. Then you tax them more, and that is where you see people disclosing small amount of money and then big allowances. Now we are going into the topic. I will explain what we meant by tax planning. People do a lot of tax planning and tax calculation. Okay, now they evade tax in a very nice way because certain things are not taxable. Certain allowances are not taxable and things. What they do is that if, let's say, they want to pay you basic salary or they want your salary take home to be, let's say, 3,000 Ghana cedis. But if your salary, they do it, you are having 3,000 Ghana cedis. At the end of the day, Ghana Revenue Authority will make you pay tax bill. The money that will be left for you at the end of the day is too small. So they will say, okay, if you want your basic to be 3,000, what we do is that we'll do the basic 1,200. The rest of the 1,800, we use it as allowance. We do it as an allowance. Then the case closed. So instead of the GI to go and tax the 3,000 and let's say 30%, they will give you 1,002. Then the GI will tax it at let's say 5%. Now the allowance to the GI said, okay, if it is between 1,000 and 2,000, tax the person 5%. So that allowance will be taxed 5%. So at the end of the day, you are paying 10% on the 3,000. Instead of you to go and pay 30% on the 3,000, you have evaded how much? 20%. So people do a lot of tax planning. Then they fix in some of the things as allowances and all those stuff. But at the end of the day, you get what they want to give you. Then we have hamper cost effectiveness, tax avoidance and evasion. Anyone you are reading and you don't understand, just hit me up and then I will explain them to you. Okay. Now, when we talk about indirect tax as it is, I've explained it already for you, so we just go straight to the advantages and then now let's look at the disadvantages, or I think the advantages of indirect tax: certainty of yield. The government also know how much it's going to get from most indirect tax cannot be evaded because they are paid as goods are bought. So you cannot evade indirect tax. The fact that you are buying, you can't evade indirect tax. That is one thing you are supposed to know, that there is no way you can evade indirect tax. Now, it is convenient, just as direct tax promote effort, goods oriented, on and on and on and on. Then you have disadvantages of the indirect tax. It is regressive. So unlike direct tax that is progressive, the more you earn, the more you pay. This one, the more you earn, the smaller you pay. That is when it comes to indirect tax. Then rigidity. Okay, it is rigid in nature and so on and so forth. Inflation, it encourages rampant increase in prices of goods and services, as I've explained from my initial introduction. The longer the item goes through the supply chain or the distribution channel, the higher the price of the item. So prices can be escalating haphazardly. Okay, cost of production is too high. Okay, at normal costs, a producer might produce this thing for 1 cedi 60 pesos, and he's good to sell it at 1 cedi 70 pesos. But because of the indirect tax nature, he or she is forced to sell it for 2 cedis. Then cost of collection. Cost of collection, indirect taxes are most of the times higher. The government spent a lot of money when it comes to the collection of indirect taxes. Okay, so that is what we meant by the disadvantage of indirect taxes. So as I tell you, we have the direct taxes and then we have the indirect taxes. Okay, as a kind of taxes or kinds of taxes that we have. Now, when we come to the other subsets, we have progressive tax, regressive tax, and proportional tax. So progressive tax is basically where the rich pay more than the poor. The higher you earn, the higher you pay. Regressive tax, the higher you earn, the lesser you pay. Proportional tax, where each and everybody pays equal. High, low. That is basically what proportional tax is about. It's fixed in nature. So irrespective of whatever amount you earn, whether you are earning more or you are earning low, that is the tax you pay. So if I should take I don't know which kind of tax I can use. Let's say road toll. Okay, somebody who is being paid 1 million Ghana cedis is driving a Toyota Corolla. Somebody who is also being paid 2,000 Ghana cedis is driving Toyota Corolla. When you get to the toll booth, we all pay 50 pesos and cross the toll. That's it. So whether he is being paid 1 million and be paid 600 Ghana cedis, we all pay that amount of tax. It's fixed, and then we all pass it and we go. Okay. Then you must also know or learn about the role of taxation. Okay, you must also read around the role of taxation. Okay, the role of taxation. If you don't understand it, hit me up and then I will explain for you. Now somebody on the WhatsApp platform asked wanted to know the difference between tax evasion and then tax exemption. Now, I want to explain 3 categories of it for you: tax evasion, tax avoidance, and tax exemption. Now, when we talk about tax evasion, it is a deliberate attempt to refuse to pay tax. You are deliberately dodging the payment of the tax. That is what we talk or what we meant by tax evasion. So when somebody deliberately refuses to pay tax to the government, we need the hopper. That is tax evasion. When we talk about tax avoidance, the person is refusing to even be captured by the tax brackets, or the person is refusing to be captured in the tax brackets. You are doing yourself in certain way. Coming 1 minute. Okay, so the one is deliberate, one is not deliberate. Now, I want to give you a classical explanation. Now, when somebody is avoiding tax, the tax planning I've explained for you. So the person sees that, oh, if I disclose this money, I'll pay 30%. Let me disclose it like this, then I'll pay 20%. That is tax avoidance. So when the person finds ways and means to reduce his income in such a way that he's going to pay lesser tax, is tax avoidance. Tax evasion is highly illegal, and it's a deliberate attempt by people to evade or not to pay tax. Now, the big difference between the two is that one is an attempt to reduce the amount of tax you pay, and one is an attempt not to pay the tax at all. So the attempt not to pay the tax at all is tax evasion. Tax evasion, yes. And the attempt to reduce the amount of tax you pay is tax avoidance. Now, when we talk about tax exemption, it is legal, and tax exemptions are given by Parliament or by the Ghana Revenue Authority itself. Now, when we talk about tax exemption, this is a situation where a taxpayer is given a waiver for not to pay tax on certain item or certain income. That is tax exemption. So where the taxpayer specifically stated that this type of income should be exempted from tax, it is tax exemption. So for example, the government of Ghana, the president's salary he or she receives is exempted from tax. The national service allowance they give to students are exempted from tax. And other allowances, there are several allowances, the nurses allowances, they are all exempted from tax. When some companies are bringing in some big equipment to help the developmental projects in Ghana, they are exempted from tax. So for example, we have given contract to Quares Galval, those who constructed the Circle Dubai interchange, and then those who are constructing the Pokwase interchange, and those who are still constructing the Carnation interchange. The equipment they import or the overheads that they import into the country, when they get to the Ghana port and harbor, they must pay duty on them. But Parliament can give them exemption or give them a waiver that this equipment, when they land into Tema port, give them free way to pass. Don't tax them, don't collect money from them. That is tax exemption. So tax exemption is where specifically the Ghana Revenue Authority gives you the order not to pay tax on certain income or certain goods you bring into the country or you derive in the country. That is basically the difference between them. Now, let's continue. So as I was saying, you should know the role of taxation, and if you don't understand anything, let me know, and then I will explain them to you as well. Now, you must know the attributes of a good tax system. You must know the attributes of a good tax system. When we talk about attributes of a good tax system, it basically means when we are talking about taxation, taxation operates in a system, and that is the tax system. And for this tax system to be considered a good tax system, as I'm saying, for a tax system to be considered a good tax system, such a tax system must have certain qualities, must have certain characteristics, must have certain capabilities and abilities. The first of all is equity. A good tax system should be fair. A good tax system should be fair to each and every individual considered as a taxpayer. So you don't look at my forehead and see that my forehead is shining, so you pay 10%. You don't look at somebody's forehead and say your forehead is not shining, so pay 5%. You don't look at somebody and say, oh, you are my girlfriend, pay 2 CD. This guy, he want to do me something. You go pay 10 CD. You don't look at somebody and say that, oh, he is black, so he can work hard, so he can pay 10%. Where he is fair, so he cannot work hard, he should pay only 2%. You don't do that. A good tax system should not be biased towards taxpayers. Tax payment in the good tax system should be commensurate to the income level of the taxpayer. So the tax you are collecting on the income of the taxpayer should be commensurate, should be in the right sense, being okay to pay. A good tax system should have the qualities of sanctity. Each taxpayer should be certain about the amount of tax he or she is going to pay. If I know the liability, you know tax is a liability. If I know the liability burden on me, I know how I'm going to adjust rates. So a good tax system should be certain. Taxpayers must be certain, tax collectors must be certain. So if I know the rate is 5%, I know it's 5%. Know that today I come, they say 5%, tomorrow 10%, I come 15%. So as I'm coming next, I don't know whether it's going to be 5, I don't know whether it's going to be 10, I don't know whether it's going to be 15. No. Tax system should not put taxpayers in suspense. That is what the certainty means. Convenience. It should be, a good tax system should be a system where the payer can conveniently pay and the collector can also conveniently collect from the taxpayer. I don't need to travel from here to Wale Wale to go and pay 2 cedis. I don't need to travel from here to Kumasi to go and pay tax. No. If I have to pay TNT 200 Ghana cedis to go and pay tax of 100 Ghana cedis, who will go and pay? If I have to pay transportation 200 to go and pay tax 500 Ghana cedis, who will go? If they also have to pay 200 to come and collect tax 500, who will come? But if I have to pay 1 cedi to go and pay tax of 500 Ghana cedis, at least I'll go. That is why you see Ghana Revenue Authority scattered around the whole of Accra, because they try to make it convenient, closer. It should be closer to the taxpayer, so that the taxpayer can easily walk. It should be a walking distance, because already the money the person is coming to pay, so if Mesa tia another scan, son of Mesa tia scan namawa, and I mean back, because the thing is my money, and I'm coming to give it to you. Why should I be struggling? That is it. The last but not the least is economy or efficiency. The cost of collection should not be more than the cost of, or should not be more than the revenue. I cannot spend 500 Ghana cedis to go and collect a revenue of 200 Ghana cedis. It's not mind-boggling. I cannot spend 400 Ghana cedis to go and collect revenue of 500 Ghana cedis. It's not cost-effective. So the cost of collection should be very, very minimal. So the Ghana Revenue Authority should not spend more money to collect just some peanuts. That is what a good tax system must have. Every good tax system must have these 4 qualities. If one failed, it cannot be called a good tax system. So all these 4 qualities must be established to call a system a good tax system. We have other characteristics. That is, a good tax system should not be political. A good tax system should be simple, simplicity. A good tax system should be flexible. A good tax system should be productive, on and on and on. You can read that one too from the PDF I've given you. And if you don't understand anything, let me know, and then I will gracefully explain for you. We have also various types operating in Ghana. You have the income tax, you have the gift tax, you have the capital gain tax, you have the mineral and mining law, you have the royalties law, you have the petroleum income tax law, you have the stamp duties, you have the custom and excise duty, the VAT, the communication tax, on and on and on and on. You have the impact or the incidence of tax. When we talk about the impact or the incidence of tax, we are talking about just the burden, the tax burden, okay, on taxpayers. And then you look at it, just look at it in the PDF. If you don't understand anything, let me know, and then I will gracefully explain for you. There are questions here for you, self-assessment questions at the end of the page. I am doing my best, go through them. Bear in mind, I don't have any exams to write. You are the people who have exams to write. So if you don't put in effort to learn it now, the exams time will come and it will take you like rapture. So the earlier you start learning, the better. So that by the time you come to the exams hall, you are in a better position to answer most of the questions. So please kindly go through the questions, and if you don't understand anything, I'm always available, and you can get me at any time to explain for you. Okay, kindly go through them. And don't forget to like the page. Don't forget to like your YouTube channel so that anytime I drop the video, you'll be in the position to see it and learn from there. It has helped your predecessors, and I'm sure and I hope it's going to also help you too as well. You have a good evening.